Welcome back to your ultimate pit stop, Piston Pundit. Starbucks, once a symbol of steady American routine, is now sputtering as store closures, layoffs, shrinking margins, and collapsing sales expose a deeper economic breakdown. And this isn't just a coffee crisis. It mirrors the same tariff-driven shockwaves hitting automakers, dealerships, supply chains, and everyday consumers. Meanwhile, China's fast-rising giant Luckin coffee is expanding at full throttle, even pushing directly into the U.S. market. The shift is bigger than caffeine. It's a preview of America's changing economic horsepower. Here are the developments. Starbucks collapse. A U.S. giant finally cracks. Starbucks, once as dependable as America's morning commute, is now facing the worst downturn in its history. After 6 straight quarters of falling in-store sales, the chain has begun a dramatic contraction. 520 U.S. stores closed in 3 months, part of 627 global shutdowns. Employees saw the warning signs early as shifts disappeared, budgets tightened, and eventually, 900 corporate roles were eliminated. Unionized baristas across the country now protest what they see as a deeper truth. Starbucks is rapidly losing its grip on the American consumer. Foot traffic is thinning, stores sit half-empty, and the brand no longer feels untouchable. The turmoil mirrors the pressure hitting the auto industry, where Ford has delayed EV plant expansions, and GM has pushed back major EV launches. Both industries, once pillars of American confidence, are now battling the same collision of rising costs and weakening demand. Starbucks' unraveling isn't just about coffee. It reflects a much broader economic shift reshaping even the strongest U.S. brands. And this internal unraveling is only part of the story, because the external forces hitting Starbucks are far more explosive. Tariff Shockwave: How Policy Ignited America's Breakdown. Starbucks insists its closures are part of a strategic reset, but analysts point to a far more powerful force behind the collapse: tariffs. President Trump's 40% tariff on Brazilian coffee, still active, hit the industry like an economic bomb. Since Brazil supplies 1/3 of America's coffee beans, U.S. importers quickly slashed purchases by more than half. Inventories plunged, Arabica and Robusta prices spiked, and roasters and cafes saw their margins crushed. The same pressure has been squeezing the auto industry. Tariffs on steel, aluminum, batteries, electronics, and key vehicle components have driven production costs to record highs, leaving dealerships overloaded with vehicles they can't sell. For Starbucks, the cost surge went far beyond beans. Espresso machines, fixtures, packaging, and stainless steel equipment all jumped in price. Consumers, already strained by inflation, pulled back, just as car buyers have hesitated at soaring sticker prices. Policies meant to protect U.S. industries have instead made operations more expensive. Starbucks' struggle is the latest and clearest sign that tariffs are eroding American affordability across multiple sectors. Before we delve deeper, do us a favor and smash that like and subscribe button. This helps us reach more auto enthusiasts just like you. Now that we've tackled the external pressures, let's shift gears toward what's happening inside the company itself, where the cracks run even deeper. Corporate chaos: Starbucks spin versus harsh reality. CEO Brian Niccol insists Starbucks' Back to Starbucks plan is working, promising cozier cafes, simpler routines, and a return to the company's cultural roots. But behind the optimistic messaging lies a harsher reality. Earnings filings show slowing sales, shrinking margins, reduced guidance, and quiet cancellations of planned expansions. Investors aren't convinced either. Starbucks stock continues to lag as Wall Street questions whether the turnaround is truly underway. Inside stores, the picture is even more troubling. Baristas report disappearing shifts, tighter supply orders, and sudden labor cuts. Managers describe frozen training budgets and entire departments quietly reorganized or dissolved. Many employees who once felt secure now arrive at work unsure if they'll still have a job next month. These internal cracks mirror what's happening inside major automakers like GM and Ford, where EV ambitions have been scaled back despite public optimism. The gap between corporate spin and operational strain is widening fast. Starbucks isn't restructuring from strength. It's reacting to an unsustainable environment shaped by rising costs, weak demand, and intensifying global competition. And as Starbucks fights to stay afloat, its biggest threat isn't internal at all. It's coming from overseas at breakneck speed. Luckin's explosion. China overtakes America's coffee crown. As Starbucks pulls back, China's Luckin coffee is accelerating with astonishing speed, creating a reversal few expected. After recovering from a major accounting scandal, Luckin has staged one of the most impressive corporate comebacks in recent history. The company now operates over 29,000 stores, adding more than 3,000 locations in a single quarter, the kind of rapid scale once associated with early Apple or Tesla. Unlike Starbucks, which is shrinking, Luckin is expanding aggressively, including into the US. Its New York City launch sparked viral buzz, 99-cent promotions, influencer-driven hype, and enthusiastic coverage in Chinese media framing its arrival as a symbolic victory amid tariff tensions. Luckin is also preparing for a NASDAQ relisting, signaling strong confidence in its revived business model. With app-based ordering, low prices, domestic supply chains, and government-backed efficiency, Luckin operates at a cost level Starbucks can't match. The pattern mirrors China's EV success with brands like BYD, scale fast, price low, and outmaneuver US rivals. If Luckin thrives in America, it could become another example of Chinese companies outperforming US giants on their home turf. But Luckin's rise doesn't just threaten Starbucks, it highlights a much larger vulnerability across the entire US economy. Ripple effect. Starbucks signals America's coming storm. Starbucks' downfall is more than a corporate setback. It's a preview of deeper trouble across the US economy. When a company so embedded in daily American life can't keep stores open, it signals that powerful forces are reshaping the business landscape. Tariffs, inflation, fragile supply chains, and falling consumer spending are creating pressures that extend far beyond coffee. These are the same challenges pushing automakers to rethink production plans as raw material costs climb and global supply routes remain unstable. Starbucks' retreat exposes how vulnerable US industries have become under policies that isolate supply chains rather than strengthen them. No sector depends more on global collaboration than automotive manufacturing, and the strain is visible. Delayed factory projects, scaled-back EV programs, and workforce reductions. The pattern is identical. Meanwhile, China is capitalizing. Luckin Coffee's surge into the US mirrors Chinese EV brands' rapid global expansion, powered by low costs and tightly integrated domestic supply chains. Starbucks closures are an early crack in a system under pressure. The auto industry may be next, and the impact could be far greater. Which brings us to the ultimate takeaway, a conclusion every American industry should pay close attention to. Final verdict: a stark warning for all industries. Starbucks unraveling is more than a caffeine crisis. It's a red flag for every US industry that relies on global supply chains, imported materials, and price-sensitive consumers. Tariffs, rising costs, global competition, and shifting consumer behavior have created conditions even legacy brands are struggling to survive. Luckin Coffee's explosive rise shows how quickly global power can shift when one market is burdened and another accelerates with precision. And if Starbucks, a brand with nearly unmatched cultural presence, can lose its footing, the automotive sector, already under immense pressure, may be closer to its own turning point than many realize. The next major shock may hit much closer to the garage than the cafe. So we want to hear from you. Do you think Starbucks can recover, or is this decline permanent? Are Chinese brands simply outpacing US companies with better efficiency and scale? And how soon do you think the auto industry will feel the same shock Starbucks is facing today? Drop your thoughts and predictions in the comments below. Make sure to subscribe to Piston Pundit so you never miss the next big update on vehicles, industry shifts, and the trends reshaping the automotive world. Thanks for watching and see you in the next video. You can now check out any of the videos on the screen. There's plenty more to explore.